U.S. factory orders rose 1.5% in June, which seemed to beat expectations and encourage participants in the U.S. stock market to bid prices higher. We ended up with a fairly strong session where we did close at the highs of the day for nearly all of the major U.S. equity indices. We'll take a look at all that, see what it means for our posture. Then we'll get into our trade application example, where I wanted to focus on a biotech stock that's bouncing up and off of its rising 30-day moving average. So we'll take a look at a sold put example on that tonight. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 3rd, 2021. First of all, if you're new, welcome aboard. Remember to go over to our channel there on YouTube and click subscribe. While you're there, make sure you check out our description area so that way you can sign up for our email distribution list as well. We also really appreciate those of you that smash that like button there for us. Helps the YouTube algorithms along. In addition to that, we're heavy users of Twitter. If you're not doing so already, feel free to follow me at Brandon Van Zee. And I really appreciate those of you that help spread the word about these Market Outlook related tweets on Twitter as well. And then last but not least, feel free to join our group on Facebook at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. Let's go ahead and start off with kind of our heat map here of the Market Scholars 1000, which give us a general sense as to which stocks were doing the best and the worst here today within our universe. And a couple things stand out to me. First of all, I do see a little bit of red on the board here today, and it has a bit of a theme in terms of which part of the world they are coming from. In particular, you can see NetEase right over here with a really dark red color. Remember, that's a very big company these days over in China. It's a video game company, and that has been one of the areas that China has started to make some comments on, and there's fear that the Chinese government will start cracking down on video game companies here. Now, they've walked back their statement, so things weren't as disastrous as they appeared last night overseas in Shanghai when some of these stocks were really down significantly. Nonetheless, there's still kind of feels like you're walking on pins and needles with the Chinese government right now, especially after what we saw happen with the for-profit education stocks. So NetEase suffered quite a bit. Another big stock that you don't see here that also suffered was Tencent. Now remember, here in the United States, Tencent is just traded in the over-the-counter market, so it's not quite as liquid as what we find with the traditional ADRs, but make no mistake, it is a very important company, one of the largest companies on the planet, and it was down significantly in Shanghai last night as well. That did bleed over to some of the more well-known Chinese stocks that do trade here a little bit more actively, like Alibaba. It was down today. Baidu was also down today. So there's Pinduoduo also down today, and then JD.com. So definitely a little bit of a theme there with some of those Chinese kind of digital internet video game types of plays that struggled on a relative basis today. I also see a bit of weakness over here kind of in the kind of left-hand bottom portion there with Visa and MasterCard and Fiserv and Square and some of those types of companies there. So I'm not sure what to make of that. I do know that Apple came out with a news story that they were teaming up with Affirm, which is somewhat of a smaller company compared to like the Visas and the MasterCards out there, but Affirm does help payments and helps people pay for stuff up front and then pay that back later, and Apple is trying to team up with them. So perhaps there's a little bit of fear here with some of these other names that they're suddenly going to have a more powerful competitor in Affirm if they've got kind of Apple's backing there. We also saw a big news story yesterday. Most of you probably caught this, but if you didn't, Square made a major acquisition yesterday with Afterpay, which is a competitor to Affirm, but Afterpay is based over in Australia. It's a huge company over there, tens of billions of dollars, but Square is going to be buying them out. So some interesting news coming from that area today. Was a little bit of a cool off for some of those types of stocks. Otherwise, we had a pretty green day, as you can see. A lot of green popping up on the board. I see BP. I noticed that it was in the news here today with raising its dividend. There's Moderna. I talked about Moderna in my top-down trend trading class yesterday, talking about how we narrowly missed a 10-bagger there in that case. So if you're a premium member, feel free to go back and watch that recording from yesterday's class if you didn't catch that. Other stocks that are up, I see Pfizer with a nice move higher. They've been up here in the last couple of weeks. A lot of those vaccine manufacturers really moving up nicely here recently as a result of this kind of lingering, coronavirus variant known as the Delta variant here in the United States. You can also see Eli Lilly had some green to it today, up nearly 4% there. In general, lots of that healthcare related action up there in green, and that is something that we've noticed in my top-down trend trading class as well, is that healthcare has really been firing on all cylinders here more recently. All right, let's get back on over here now to the normal charts where we take a look at the 4 major U.S. equity indices. And you can see it was a really positive day. You might not necessarily know it through just the end result, but if you guys are aware of how the candles get shaped, you'll see why it's so impressive the way that we ended today. Notice that all of these have these open bodies on the candle. And what that signifies in this case is that we closed at basically the highs of the session on all 4 of these indices today. And that is generally perceived quite bullishly because it gives you the impression that had the stock market been open another hour or two, stocks probably would have kept on rallying even further. So it kind of builds up that pent-up energy that more likely than not leads to further bullishness first thing tomorrow morning. Now, of course, we do have to recognize we're in earnings season right now. And so if there's some big companies coming out with earnings releases that are not all that great after the bell tonight or tomorrow morning before the bell, that can change things. But all else being equal, it's usually a very bullish thing to see us close at the highs of the session as we did here today. Now, you'll notice that not only was that impressive, but we also had something new to report in the terms of the market forecast and how we evaluate it based upon these different indices. And that comes here in the lower right-hand corner with the Russell 2000 chart. Now, it was only up 0.36% today, which I'll note is actually the worst of these 4 on a one-day basis, but it was up enough to actually change the posture. So notice that we've got a change in the background color here on the Russell 2000. Yesterday it was this dark pink shading, and now today it went to that light green shading there. And I will also mention that we're fairly close to getting that to go back to a dark green shading. Remember how this background color works here. We look at this green line as the intermediate line on the market forecast to determine what our intermediate posture is. If that green line is rising between 20 and 80, we would consider that to be bullish. If it's between 20 and 50, we'd consider it to be weakly bullish. If it's between 50 and 80, then it's strongly bullish. So where we're at right now is basically at 49 and rising. In other words, you're about as close as you can get to a strongly bullish posture without actually having it, and it could happen as soon as tomorrow. So we'll keep our eye on that. Now, having said that, that's a positive thing, don't get me wrong, but if I'm looking at these 4 charts and I'm honest with myself, I think you guys can probably see what I'm seeing as well, which is in this particular case, this chart is the only one that's trading below its falling 30-day moving average. Notice that moving average color is still red. And so I just don't know how much we can trust the Russell 2000 quite yet. I hope, as we move along through the year that will become the case and they will become a little bit more trustworthy. But right now, it just feels like it's a little bit directionless. And there's a slight tilt to the downside that I want to be aware of if I'm thinking about trading that particular area of the market. Whereas the trends have been more robust and established in these other 3 areas, like the S&P 500 in the upper left-hand corner. It was up 0.82% today, closing basically at the high of the session and just within a stone's throw of its all-time high. You'll notice that it still has a strongly bullish posture. Remember, when you're in the upper reversal zone above 80, it doesn't matter if you're rising or falling with that green line. We consider that to be strongly bullish. So that has been the case for the last couple of weeks, and it's above that rising moving average right there as well. We can say the same thing for the Dow Jones. It was up 0.8% today, so not quite as much as S&P 500, but nearly. And it is also just a stone's throw away from its all-time high. From a closing price perspective, that was actually back here on July 26th. From an intraday perspective, it was actually yesterday. So you could see both of those records being broken as soon as tomorrow if we do have a big up session. And this is a positive sign to see us pushing up and away from that rising 30-day moving average in that case as well. And then last but not least, we do have the NASDAQ composite in the lower left-hand corner. It was up 0.55% today, so not quite as much as what we saw at the S&P 500 and the Dow, but still looking like a fairly strong chart here. As you can see, it's flirting with that rising 30-day moving average there, and it looks as of this moment in time like it would like to bounce up and off of that area to break through that prior high on July 26th. So we'll see if that is what's in store or not. But all in all, things continue to look good, right? There's always worries in the market. There's always news stories that might concern you. But the truth of the matter is, when you're looking at these charts, for the most part, with the exception of the Russell 2000, for the most part, these other three charts have told you to be bullish during this last 3-month period. And there's a lot of reasons that get in the back of your head of why you shouldn't be bullish. But the truth of the matter is the charts, at least the way that we interpret them using the market forecast, have suggested that that is where you should be. So for those of you that have stayed long and strong during this time period, well done. And for those of you that didn't, well, there's always an opportunity to learn. And none of us are perfect, I can assure you of that. But this is one of the things that you'll learn over time, is that if you're trying to become proficient at technical analysis, you kind of have to trust what your eyes are telling you, not necessarily what your gut is telling you. And I know that can be a hard thing to separate at times. Let's go ahead and take a look at our next chart setup. And this will be our 3 green arrows chart setup. This will be chart 4D for those of you that are premium members of Market Scholars following along at home. In this case, we actually don't have any of these 4 charts with 3 green arrows or 3 red arrows. Notice how the background colors of all 4 of our charts are white behind the current candle, telling us that there's a mix of green and red arrows on every one of these charts here. And it looks like for the 3 leading charts, the problem is the MACD histogram. Notice we've got a red arrow creeping in there on the S&P 500. There it is on the Dow Jones, and there it is on the NASDAQ composite. Otherwise, we do have green arrows in place on the moving averages and the stochastics on all 3 of those. So it's just if we can get a little bit more momentum back, we'll get the 3 green arrow status back as well. And I think if we start taking out these prior highs that these indices have been hitting in the last week and a half or so, there's a pretty good chance that that MACD histogram will go right back up above that 0 line, and we'll be back into 3 green arrow status as soon as we can there. And of course, that doesn't guarantee anything either. All it does is it reminds us whether we would rather be long or short in terms of our trend trading status. And if you've got 3 green arrows, especially with a rising 30-day moving average, then that's usually some pretty good trend trading opportunities. And I can definitely confirm our Monday top-down trend trading class is doing quite well right now. We kind of stalled out there for a while earlier this year, but all of a sudden we're firing back very strongly again here more recently, as we've been kind of pushing into some of those areas that not a lot of people spend a lot of time on, like real estate as one example. That has been doing quite well here recently. That's really benefited our portfolio there. So anyway, there's opportunities out there if you're willing to keep your eyes open towards them. But again, I would stress that of these 4 charts here, it does look to me like the Russell 2000 continues to be our laggard in this environment. The other 3 look like they're reasonably good places to be looking for trend trades. Let's go ahead and take a little peek over here at the internet. Always like to get a chance to say thank you to those of you that help support this project. Remember, it takes a few hours for David and I to put this free video together every day for you, and we don't get paid to do it. So we try to do it to promote our business and also to spread a little education along the way. If you are benefiting from that, we ask you one simple thing in return. That's just simply to click like for us there on Twitter. There's several different ways you can go about that process, but I do appreciate all 105 of you that did that for me last time around. Anytime I'm up and over triple digits, I'm happy to do it. If I'm below triple digits, then I just have to check my schedule to see if I have the time to do the video or not. So if you wanted me to do it as often as possible, make sure you keep on clicking that like button. Also, an opportunity here to say congratulations. Some of you may not know, but I went to a really small college, University of South Dakota. We don't get a whole lot of world-class athletes that go through that particular school. It's not up there with your big 12 schools or your SEC schools or anything like that. We're a small-time school. In fact, when I went there, it was Division II. It's Division I now. But anyway, all of us Coyotes are quite proud to have Chris Nilsson bring home the silver for the United States. So congratulations, Chris. Go Yotes, and keep up the great work representing the United States there in the pole vault. All right, one other thing I would mention is I did put together the dividend growth investing updates for the month of July. That was just posted to our website last night. Now you can see it over here listed in the popular recent blogs area if you want to check that out. Otherwise, remember, if you're not seeing it over there, because that's based upon an algorithm on what stuff gets clicked on the most. So if you're ever just on our website and looking for that, you can come up here to just hover your mouse over blog and then click on dividend growth investing, and then you'll see the recent posts for that. So anyway, this is one of the few things on our website that is available completely for free, so it doesn't matter what subscription level you're at with us. This is something that even if you don't have a premium level or what have you, you can access. So if you wanted to check out some of those recent dividend increases that were taking place, check in on your dividend portfolio. That might be a good way to spend a little bit of time there. And I did review this today in my dividend growth investing trading room. For those of you that have access to that, you can check out the recording to get my interpretation of all of these increases and which ones I seem to favor over others, and all of that if you want to check out that recording from earlier today. Tomorrow morning I'll be back in action with our factor-based swing trading class, and then David will be doing his inventory management class tomorrow. So lots of great stuff as always coming your way. All right, let's get back on over here to the Thinkorswim platform. Let's do a little bit of sector analysis. Wanted to make sure that you were aware. Most of you got the message if you're a premium member already, because I would have sent it out via Telegram or Twitter or other places you might have picked up on it. But I did do a major update to some of our charts over the weekend. Charts 1A, 1B, 1C, 1D, 1E, 1F, and 1G have all been updated, and this was more than just a minor cosmetic update. These were major overhauls of some of the charts based upon the calculations we use for relative strength and the scoring method that we're using to kind of separate the wheat from the chaff, so to speak. So if you are a premium member, you remember you have access to all 50 plus of those charts that David and I use in our presentations. And so our main document under our premium tools area has now been updated with the shared links for you to easily import into your own Thinkorswim platform, so that way you can have access to all of those as well. Again, that's a perk for those of you that are premium members. That is something that's not eligible for the plus subscription. So anyway, let's go ahead and talk about chart 1G here, which is our equal weight sectors 12 grid. So as you can see, we've got some new color coding background that's kind of popping up here based upon the scoring system that we use called the WAR score, which is just an acronym. It stands for weighted aggregate returns. And it's a way for us to score out different ticker symbols based upon performance over multiple periods, where we're weighting the more recent time periods more heavily than the further back time periods. And the color coding background in this case is basically giving our eye a heads up as to which of these in front of us are being ranked more favorably from a performance perspective than others. And so the four green charts on the board that show up are the areas like real estate, which is down here in our lower right-hand corner. We've got healthcare in our lower left-hand corner. We actually bought a healthcare stock yesterday in our top-down trend trading class, as that's an area that we want to start focusing on a bit more. Real estate, we're already pretty filled to the gills on, so we're going to concentrate on healthcare a bit more going forward. We're already pretty filled to the gills on industrials, which is kind of that middle green chart there. And then we've got a little bit of room for some additional exposure in technology up there in the upper right-hand corner, although I will say that the class's selection of Fortinet here a month or two ago has been doing really well. That stock is I think it's an internet security type of a company or software security company, and it's been doing quite well. I keep seeing ticker symbol go by on CNBC. There she goes. You can't really see that because of the background color, but just trust me, that stock is really ripping here, and it looks like they did just have their earnings announcement. So I'm happy with what I see out of that one. But remember, when we're looking at this chart 1G, this is an equal weighted approach. Many of you that watch this more generic YouTube video here, you might be more familiar with the market cap weighted approach that we traditionally take. Those ticker symbols are more popular because they do weight stocks like Amazon more heavily than other consumer discretionaries. But remember, there's a lot of different ways you can approach the market. And if you don't want to give extra emphasis to the biggest companies out there like Apple and Tesla and Amazon and Microsoft and those, and you think that all stocks should be weighted equally, then this is one way to approach that. So for example, up here with technology, what I'm using there is it's RYT. With the consumer discretionary, it's RCD right here. As we're looking at these charts, you can see that those green colored background charts look really strong, in particular the corners, right? The technology, real estate, and healthcare have been those areas that I've been mentioning here in this market outlook video for the last couple of weeks because the charts are really strong. Industrials is okay, so I don't want to necessarily just throw it under the bus, but I don't think that chart right there with industrials looks quite as good as those corner charts that I mentioned. But it's kind of neck and neck there, kind of in the middle territory. But notice the difference between those green charts and then the red charts. The red charts look quite a bit different. Materials, energy, consumer staples, those are areas that are kind of struggling right now. I saw Clorox as an example really getting hit today in the consumer staples world. But you can kind of see why we have a new ranking system with that war score that's different than the old war score that I used to use, where we used to have some input from up to a year ago. We've kind of recalculated things to emphasize the near term a little bit more, so that way we can hone in on those charts like technology, real estate, and healthcare, and put less emphasis on things like energy and materials that are starting to struggle here more in the near term, even if they have good one-year look-back performance. Let's go ahead and take a look at our 12 grid for the asset classes now, and this will be chart 5A. And as we're looking at these, you can see here that there's quite a bit of green on the board, but the red ones that kind of stand out a little bit more are the two in the bottom corners. So we have the US dollar in the lower left-hand corner, and then we've got the 10-year US Treasury yield in the bottom right-hand corner. And so the Treasury yield, that's been a story for a long time, right? Unless you've just been completely sleeping through our presentations for the last 3 months, you've known that interest rates have been falling during this time period. Remember, that was not the case at the beginning of 2021, so that's what makes it kind of unique. Interest rates were rising as we started 2021, but have really rolled over here significantly in the last 3 months. US dollar is a little bit of a different story, where it hasn't been as consistently weak as what we saw there with interest rates, but more recently it has become weak. So it is seemingly kind of stabilizing in this area just below its moving average right now, but it's not really making progress at the same time. So the good news is it stopped the bleeding. On the bad side of the equation, it hasn't really rebounded the way that you would assume if it was going to eventually get strength either. So we're kind of stuck in no man's land right now with the US dollar. In terms of some of the commodities that react to the dollar, you can see here that gold was down slightly today, but you do have a strongly bullish background color, that dark green now, and we do have a green moving average telling us that price is above a rising moving average in this case. So the chart is firming up a little bit. I still have that bearish gold trade going for this video's trade application example. It was a bear call spread, and I'm still in good shape with the trade. We're still making money on paper, but it is true that if I were to look at the chart today versus when I put that on originally, I do think that the gold chart looks a little bit better now. So it has stabilized a bit, and who knows, maybe it starts finding a bounce in this area and starts working its way higher. Right now, it's still questionable, right? It is a chart that doesn't have a strong trend in either direction, and that's okay for the type of trade I selected there with the bear call spread, where we make money off of time decay. But we will want to keep our eye on this, because it looks looks like it's starting to establish these zones here. And if we break out in one direction or another, there might be some opportunities there from an individual gold stock perspective that we could start taking a look at. Oil was down today, 0.67% there on USO, and it does have a weekly bearish background color there, and we do have price below a falling moving average now all of a sudden. Notice that color shift on the moving average from green to yellow to now red, telling us that price is below a falling moving average. I know it's probably hard to see with the naked eye there, but that's why we color code it, so that way we don't have to strain ourselves to look if it was up, down, or sideways. It was down, not by much, but down slightly there, and it's kind of stalled out here at these higher levels. So it kind of seems like gold and oil have a little bit of a temperature change, whereas gold was kind of in a funk earlier, about, let's call it a month and a half ago. They've stabilized and have gotten a little bit more of a bullish tilt here recently, whereas oil had been quite strong a month and a half ago and have kind of just started to stall out at some of those higher levels more recently. So kind of heading in opposite directions there. In terms of some of the other charts that are bullish now, Bitcoin remains intriguing to me. Obviously a highly speculative asset, so not for the faint of heart, but for those of you that are traders out there, I do like the way that that Bitcoin has stabilized above this rising moving average. The trick, of course, is there's just not a whole lot of ways for me to show you how to play it. There's a couple of things out there, like GBTC as an example would be one way that you could buy it through kind of the stock market, but a lot of this would have to be done through crypto types of apps and things like that, where we don't have paper money to help us with the educational aspect of it in these videos. But here's GBTC as an example, where you can see it kind of gives you the same setup as Bitcoin in general, where it is above that rising moving average. It was down today, but you had that big gap up a week or two ago on that, fake Amazon news, and it's still holding that gap up level there. So I think that's a positive sign. Notice that for the last 3 months, Bitcoin has been in the house of pain, but here over the last, let's call it week or so, that red moving average has started to tilt higher again, turning into a green moving average. So for those of you trying to pick your spots, you had this oversold cluster signal here. You had a pop above the moving average. The moving average is now rising. The background color of the chart is now dark green. This is kind of an intriguing level for those of you that want to start, dabbling just a touch there in Bitcoin. You can see that foreign bonds continue to be a workhorse to the upside, and even long-term bonds here in the United States continue to have nice, strong, bullish posture there. Within the foreign stock markets, you can see that the developed foreign stock markets continue to look better than the emerging foreign markets. Again, it's a China story, right? Get back to what I'd mentioned before. China is the most important country within EEM, and so when you have stocks like NetEase and Tencent getting slammed overnight, it's really going to make the EEM relatively weak in comparison to EFA. The good news is EEM still closed higher today. So despite some of the negative performances from the Chinese stocks, the stocks from the other emerging markets were able to kind of hold up their end of the bargain. They just collectively could not go up at the same rate as what we saw in Europe and Australia, Japan, and elsewhere here with the developed foreign stocks. But they both have green background colors. It's just that the developed one is trading above its rising 30-day moving average and has a dark green background color, telling us that it's a strongly bullish posture, according to the intermediate line on the market forecast, whereas EEM is just a weekly bearish posture at this point. So I'd still be a little bit cautious around EEM here. Yes, you got those oversold cluster signals. We're getting a reversion to the mean bounce here, but it has not been really aggressive, and it makes you wonder if it's going to start running out of gas here before it approaches that falling 30-day moving average in this particular case. All right, let's get into our trade application example. I mentioned before that healthcare stocks were really starting to roar here more recently. And so that's an area that I've been wanting to kind of focus my attentions on a bit more. And there was a company that caught my eye here today. Let's go ahead and just pull up chart 4A for this conversation, just a market forecast 1 grid. And the stock is Gilead Sciences. And this is a company that is a bit controversial at times. It's a company that has been around for a long time as a biotech company. It's a rare biotech company that actually has like a 4% dividend yield. So it's been around and it's been a cash flowing machine for quite some time. It just really hasn't had the giddy up and go from a stock price perspective, as it's still well below its highs from a few years ago. But you can see here on the 3-month chart, it's just been kind of gliding along and doing its best to stay above that rising 30-day moving average. They did come out with their earnings here last week, and their earnings were $1.87, which beat the analysts' expectations of $1.76. So a pretty healthy beat there for the company. Remember, this is the company behind remdesivir, so they really benefited for treatments of coronavirus and some of the other COVID-19 variants that may be taking place out there. So that is not something that you can necessarily expect to be replicated in the years to come. It was kind of a one-time boost there for a drug that they had just sitting on their shelf that seemed to help to a degree, but was not designed specifically for the coronavirus. So it was nice to get millions and millions of dollars worth of sales all of a sudden, but it's probably not something that is going to continue to work for them, let's say 3 years from right now. However, they do have, of course, other franchises out there where they do a lot of good work, and it seems like investors are reasonably impressed with where things stand right now. So what I opted to do with this bounce up and off of that 30-day moving average here today, changing the background color from pink to green, saying that we now have this strongly bullish posture according to the intermediate line on the market forecast, is I sold a put, right, a cash secured put, which means it's a slightly bullish trade where you're willing to buy a stock at a strike price that you select, and in return, you receive a credit up front. So I did the trade, as I always do, during the market session and sent out the execution details on Telegram to those of you that are premium members. So that way you could decide if you wanted to do the trade earlier today as well. But what I did was I sold the $65 put for the month of September. So that's a level where I would feel comfortable buying this company for the long term if it does roll over and goes down below 65. If it doesn't, in other words, if it continues to glide higher, if it goes sideways, even if it rolls over, but it just doesn't fall more than $4 per share, then in that case, I get to keep that premium that I received today in all of those cases. So the only time that trade turns into a trouble is if it were to fall down below 65. And at that point, this is a company that I think is a reasonably good pick for a long-term portfolio anyway. One thing that I should point out is that if we were to look at the dividend stair-step chart that we use for my dividend growth investing classes, while Gilead does not have the longest history of paying dividends, they just started paying them back here in 2015, they have raised their dividend every single year ever since they initiated one. And they're in a zone here with a 4% yield that we would find historically attractive for this particular company. So that might be another reason why selling a put could make some sense in this particular case. So that's what I had for you here tonight. I hope you enjoyed the analysis and the video. If you did, one simple request out of you. Click like for us there on Twitter. That goes a long way for spreading the word about Market Scholars, which helps incentivize and motivates David and I to do these videos for free for you as often as we can. As long as I get 100 likes, I'll plan to do the video again on Thursday. So get out there and do that for us if you wouldn't mind. Enjoyed the Olympics tonight. If you get a chance to watch that pole vault and you want to root for the United States, just know that that's my guy, Chris Nilsson from the University of South Dakota. He made me proud here bright and early this morning, but it should be televised later on tonight. So with that, best of luck with your trades and your investments. Goodbye for now.